Most retirees believe every Venmo or Zelle payment is private, harmless, and too small for the IRS to notice. Most people also believe that if no tax form shows up, then nothing has to be reported. That is not how this works, and that is where people get into trouble. The truth is simple: personal payments are one thing, taxable income is another, and digital payment records leave a trail. Don't click away. Hit subscribe now, or you might miss something your bank doesn't want you to know. Before I show you anything, I need you to answer one question. Last year, did you use Venmo or Zelle for anything beyond paying back a friend for lunch or sending a birthday gift to family? Maybe you sold furniture, did side work, helped with childcare, rented out a room, or got paid for small jobs. If you answered yes, then pay close attention because this may affect you more than you think. Most people assume they are safe because the amounts felt small. $50 here, $200 there, maybe $800 for a used table, or a few thousand over several months for helping someone with errands. What I want you to realize is this: the IRS does not only care about giant checks. It cares about whether money you received was taxable income and whether you reported it the right way. You might think this does not apply to you. Let me ask you something. If someone paid you through an app for a service, a product, or regular work, did you keep clear records showing what that money was for? Did you separate gifts from income? Did you write down what you originally paid for items you later sold? If you did not, then confusion can turn into a tax headache fast. Stay with me and subscribe, because in the next few minutes I'm going to show you exactly what to do, and one small mistake here can cost you money you worked too hard to save. Meet Linda. She was 68, living in Columbus and doing what many smart retirees do to stretch a fixed income. She sold a few household items online, helped a neighbor organize paperwork, and watched her granddaughter after school for a little extra cash. She used Venmo because it felt easy, quick, and familiar. She believed small digital payments were no big deal. Then one winter morning she opened her tax papers and felt her stomach drop. There was a payment total she did not expect, and it made her wonder if she had done something wrong. Her first thought was fear. Her second thought was confusion. She kept saying, "But some of that was just reimbursements, and some of it was stuff I sold for less than I paid." What she wished someone had told her 1 week earlier was this: the payment app total is not always the same thing as taxable income, but if you cannot explain the difference, you are the one who ends up stressed. She did not need panic. She needed records, clear categories, and the right steps. That is exactly what I'm going to show you exactly what to do with today. Watch until the end and subscribe, or risk making the same mistake that costs retirees time, stress, and sometimes thousands in avoidable tax trouble. Here is what nobody explains clearly. Let me break it down into 3 parts. Part 1 is the payment itself. Part 2 is what the payment was for. Part 3 is what record, if any, gets sent to you and the IRS. If you understand those 3 parts, this topic stops being scary and starts becoming manageable. The first thing you need to know is this: not every digital payment is taxable. Think of it like 3 buckets sitting on your kitchen table. One bucket is personal money, like gifts, shared dinner costs, or a grandchild paying you back for concert tickets. One bucket is selling personal items. One bucket is real income from work, services, or profit. The IRS does not treat all 3 buckets the same. Let me be very clear about what this means. If your sister sends you money for her half of the hotel on a family trip, that is usually not taxable income. If your friend pays you back for groceries, that is usually not taxable income. If you sell your old recliner for less than you paid years ago, that may still show up in your records, but it is not the same as earning a taxable profit. The reason matters more than the app. Now let's talk about Venmo, because this is where people get turned around. Venmo can be tied to payments for goods and services. If money is tagged that way, or if you are using a business profile, the platform may treat it differently for tax reporting. The rule is simple: personal payments are one thing. Payments for goods and services are another. Now let me show you why that matters. Here is the exact number you need to remember about peace of mind, not panic: 0. 0 forms does not mean 0 responsibility. Even if no form ever lands in your mailbox, taxable income is still taxable income. By the time I'm done, you're going to know more than most people who casually repeat bad advice at the coffee shop. Hit subscribe right now because the next part can save you from believing one of the most expensive myths retirees hear every tax season. Now let's clear up Zelle because many people get this backwards. Zelle works differently from some other payment platforms. A lot of people hear that and think they are invisible. That is the mistake. Just because Zelle may not send the same kind of tax form does not mean the income disappears. If you were paid for work, services, or a business activity, it can still be taxable even without a form. The thing everyone gets backwards is this: they confuse reported by the app with taxable by law. Those are not the same thing. A form is a reporting tool. Taxability depends on what the money was for. If you earned it, profit is profit. If it was a gift, a reimbursement, or money from selling your own stuff at a loss, that is a different story. The app name is not the deciding factor. Let me make this even simpler. Imagine two envelopes. One says money received. The other says why I received it. Most people obsess over the first envelope and ignore the second one. The IRS cares about both. If you can explain why the money came in and back it up with records, you are in a much stronger position than someone who just shrugs and says, "It was all on my phone somewhere." There is another piece people forget. Some platforms may ask for tax information, and if you ignore those requests, you can run into backup withholding. That means a chunk of your money can be held back before it ever reaches you in full. Let me be very specific. Losing 24% because you failed to handle tax information on time is not a small annoyance. On $5,000, that is $1,200 you do not want stuck in limbo. Do not just watch this. Subscribe and make a promise to yourself that you will act, because information without action is how people stay worried year after year. Now let me show you what happens before and after action. Let me show you George. He did not change anything. For 2 years, he mixed personal reimbursements, yard sale money, and handyman income in the same app account. Here is where he ended up: stressed, guessing at tax time, unable to prove which payments were personal and which were business. Now look at Robert. Same age, same starting point. He kept a simple log and separate notes. The difference was one simple action. Here's what I need you to see. No action means confusion. Take action and you gain control. George spent days trying to rebuild records from old messages and bank statements. Robert spent 30 minutes looking at one notebook and one monthly summary. Same technology, same generation, different outcome because one man got organized before tax season instead of during tax season. Let me show you Maria. She sold clothing, dishes, and an extra television from around the house. She assumed all sales were income. For months, she worried she would owe tax on every dollar that came in. Now look at Ellen. Same situation, same type of items. She kept notes showing what she originally paid and that most items sold for less than that. The difference was one simple action. Ellen understood that not all incoming money is taxable profit. Here's what I need you to see again. No action means fear fills in the blanks. Take action and the facts calm you down. Maria nearly overpaid because she was ready to treat everything as taxable just to make the problem go away. Ellen took a breath, matched items to records, and handled her return with confidence. That is the power of knowing the difference between money in and actual taxable gain. Now let me show you Harold. He did small repair jobs for neighbors and got paid through Zelle. He assumed that because no special tax form came from the app, the income did not count. A year later, he had no clean totals, no expense notes, and no plan. Now look at Sam. Same kind of work. Same starting point. He tracked every payment, every supply cost, and every date. The difference was one simple action. Here's what I need you to see for the third time. No action means you hope. Take action and you know. Harold crossed his fingers. Sam kept records. When you live on retirement income, hope is not a system. You need a system. Even a plain notebook, a folder, and a monthly review can protect your money better than vague memory ever will. Subscribe now and join the people who are taking this seriously, because the strongest retirees are not the ones who know the most jargon. They are the ones who build simple habits and follow through. Here's a myth that keeps people stuck. If it was under $600, it does not matter. That is simply not true. People repeat that line like it is gospel, and it causes real damage. Reporting thresholds for forms and the basic duty to report taxable income are not the same thing. A small amount can still be taxable. A large amount can still be non-taxable if it was truly personal or sold at a loss. Context decides the answer. You might have heard someone say, "The IRS is taxing your birthday money now." I need to be direct with you. That advice will cost you peace of mind because it is wrong. The biggest lie about this topic is that every transfer is income. That is not true. A gift from your daughter is not the same as payment for work. A roommate paying you back for the electric bill is not the same as customer revenue. Someone may have told you just use Zelle and nobody will know. That person was wrong because the tax issue is not built on secrecy. It is built on what the money was for. If you earn money, it can be taxable whether the payment came by cash, check, Venmo, Zelle, or a paper bag under the porch. The thing everyone gets backwards is thinking the app creates the tax. The truth is the income creates the tax question. Do not wait for the perfect moment. Subscribe now, because the window to clean up your records before the next filing season feels wide open today, but it closes fast. Move number 1. Separate personal payments from income starting now. Here is why this matters right now. Mixed money creates mixed stories, and mixed stories create trouble. Here is exactly how to do it step by step. Step 1. Decide which payments are personal and which are business or work related. Step 2. Use separate payment labels, notes, or even separate accounts if needed. Step 3. Stop using one stream for everything. Once you do these steps, tax time gets far less messy. Move number 2. Keep a simple payment log. Think of it this way. Your memory is smoke, but your written record is a brick. Your action steps are easy. Write down the date, who paid you, how much, what it was for, and whether it was personal, a sale, or income. Add one more line for any expense tied to that payment. Now here's what changes when you do this. You stop guessing, and guessing is what gets people into trouble. Move number 3, save proof of what you paid for items you later sold. This is where most people get lazy. They skip this step and pay for it later. Don't be that person. Here's exactly what to do. Look for old receipts, email confirmations, bank statements, photos, or store records. If you cannot find everything, write down your best honest estimate and how you reached it. Why this works. When you show that an item sold for less than you paid, you show it was not a taxable profit. Take action with me and subscribe, because there is a huge difference between watching a helpful video and becoming the kind of person who actually protects their savings. Move number 4. Review your app and bank activity once every month. Let me be very specific. First, you open your payment app and look at every incoming payment. Then you match each one to your notebook, spreadsheet, or folder. Finally, you flag anything unclear right away while your memory is still fresh. When you finish, you will have something priceless. A clean trail that tells the truth before stress has a chance to rewrite the story in your head. Move number 5. Ask one tax professional question before tax season gets busy. This is the one most people overlook. It takes maybe 20 minutes, but it creates real protection. Your checklist is simple. Gather your payment totals, your notes, your sales records, and your questions. Then ask which of these are personal, which are sales at a loss, and which are taxable income. Now you're protected because you are not relying on rumors from neighbors or strangers online. This next part is what I tell my closest family members. It's that important. Here's a technique nobody talks about publicly. I call it the one-page defense. On a single sheet of paper, write 3 columns: personal payments, item sales, and taxable income. Every month, sort your digital payments into those 3 columns. Here's why it works so well. It turns a scary pile of transactions into a clear story you can explain in 60 seconds. Here's exactly how to apply it right now. Print your last few months of payment history or write down the totals. Put every payment into one of the 3 columns. Add short notes like birthday gift, repaid for dinner, sold old lamp for less than purchase price, or dog sitting payment. Then keep that page with your statements. If anyone ever asks questions, you are not starting from panic. You are starting from order. Subscribe now or miss every new video that could protect your money. The choice is yours, but time is running out if you keep putting this off. Remember when I told you about that worried feeling people get when tax season hits? Here's what happened next for one viewer just like you. Carol was 71 in Phoenix. She was worried about money she received through Venmo for sewing work, a few Zelle payments from neighbors, and some old furniture she sold after downsizing. After watching a video like this, she decided to take action instead of staying afraid. Here is exactly what she did. She made her 3 columns. She separated gifts and reimbursements from work payments. She found records showing the furniture sold for less than she paid. She listed her sewing income clearly and gathered her supply costs. Then she took one folder to a tax preparer and asked one direct question. Here is the result. No panic, no guessing, no overpaying, and no sleepless nights. Her exact words were, "I finally feel like I understand my own money. If she can do it, you can do it too." One thing I want you to remember is this. The IRS is not interested in your family gift the way it is interested in unreported taxable income, and your job is to know the difference and prove it with records. Now here's what I need you to do next. Look at your Venmo or Zelle history from last year. Sort every payment into personal, item sale, or income. Then write down anything you cannot explain. That one step can change everything. If this video helped you, subscribe so I can keep helping you every week. If it did not help you yet, subscribe anyway because the next one definitely will. Join thousands of retirees who subscribe and never miss a chance to protect their savings. And remember this, doing nothing keeps you worried, but taking one simple step today puts you back in control. If you know someone who needs to hear this, send them this video right now. I'll see you in the next one.